Welcome. My name is Paul Mitchell. I'm a professor of agricultural and applied economics at the University of Wisconsin in Madison. And what I'm doing here today is recording a video going through the tax forms the farms typically file. This is part of my course, AAE 320, here at the University of Wisconsin. And before I get too far into it, I just want to be very clear, I am not a tax expert. And so none of this should be taken as tax advice. It's meant mostly as an educational tool to give a sense of the types of tax forms that farmers typically file and how they generally work. So the first form here is 1040. This is the standard form that all people file in general. And the front half, it's a half a sheet, it's a card, it's supposed to be. It's just all the information about yourself, your name and social security number, and that, your spouses and such. Page 2 is where the action is on this one. You list in line 1, you list your money, you bring in your wages from other people, different other sources of income like taxable interest and dividends and such. Line 6, you add those all up, and then you bring in amount from line 22 of Schedule 1. That's that Schedule 1 is where all the forms are where your income is at. That's for farms. We'll spend some time on that. That's where our Schedule F income and other sources of income are brought in. And then line 7, you calculate your adjusted gross income. After that, there are various deductions, standardized deductions, or Schedule A, different credits and such. You get it all done, you get your total tax payments that we went through in the video about how with that amount you figure out how much tax you would owe based off of that amount. Let's go into Schedule 1 here. What this one is where you declare your adjustments to your income or additional income. So you get some things like 10 and 11 or lines 10 and 11 or various other forms of income, but line 12 is where Schedule C would come in. Or Schedule CEZ. That's if you're earning income as a sole proprietor or some other business you run. Farms can file Schedule C. Most choose to file Schedule F. But a normal person that isn't a farmer might often be doing Schedule C income of like for consulting. My understanding is maybe Uber drivers would get paid. They might declare that as Schedule C income. Capital gains, Schedule D, we'll go through that as well. That's where capital gains are declared, like land sales. There's other 4797, some other forms of income that come in there. That's, again, mostly capital gains. And then the other big one down here is Schedule F, farm income, line 18. We'll spend some time going through that. And that's the main ones there. And there's some other adjustments here, simple ones, educator expenses, et cetera. But here's where the self-employment adjustment is made. And so you can adjust your income taxes you get credit for some of your self-employment taxes you're paid. And then you get all done, you add it all up, and this line 22 or in some of these line 36, this is what gets pushed over to the 1040. So let's go through these forms. Now, this is the Schedule C. This is what a farm could file this if they wanted to, but they don't have to. Again, it names your business and its codes and such and how to find it. It tells you which counting method you have to choose, a cash or accrual or something else, and clarify it. But more than anything, you get it's just essentially your income coming in here, cost of goods sold, and other returns and allowances. So you come up with the gross income that your company gathered. And then you have various expenses here, and you declare them all: advertising, car and truck expenses, commissions and fees, et cetera, et cetera, et cetera. You see it's all laid out here. What you're doing is you get line 7 is your total revenue or income coming in, and you get through all these expenses, and you'll subtract those expenses from that income and get your total amount due. So like line 28 is when you add up all these expenses, and then you subtract line 28 from line 7 to come up with your taxable income. Then there's some various adjustments here and such. The big one, use of home as a business and things like that. So that's how Schedule C works. And Schedule F farms are very similar. They just have different categories for the names of the expenses and such. Schedule D is capital gains and losses. And this is where you would declare, this is primarily going to be capital assets. And for most people, it's not agricultural things. And that's what this is set up for. But the big ones, longer term ones, you would declare here in line gain from form 4797. That's the one that farm might file. And that's where that would be declared here. But it's pretty simple. If you go back up here to like line 8 and such, it's the proceeds from the sale, how much you sold it for, the cost or the other basis you have for it, and then you're going to make a difference. The gain will be the sale price minus the cost, which we go through in the course as that's your gain. And then this will all be added up, and eventually you get capital gains treatment for those gains. But the key one here is gains from form 4797. So go skipping through that. Here's Form 4797, the sale of business property. And this is where a farm might, if they make, if they sell like a piece of land or something like that. So a description of the property, date acquired, when you bought it, when you sold it, the gross sales price, what you sold it for. If it's a depreciable asset like a tractor or something like that, you have how much depreciation you've already claimed, what's the remaining basis, and then the gain, which is just the sale price minus the basis, if you will. And so you get your gain, you add it all up, and you get a total gain, and that's what would show up on your Schedule D, which then will go into the schedule or into the 1040 or Schedule 1, then to 1040. So that's where that shows up here. And there's all tons. You can see this form is set up for tons of other types of assets. That I'm just showing you with the agriculture one. And there's so many different sections of property or sections of law that are used. All right, here's Schedule F. This is primarily what most farmers do. The first thing is you declare, you name and social security number and all that kind of thing. You have to name your principal crop activity. We'll show you the numbers that are there. You have to put code in. But accounting method, is it cash or accrual? This is how we know 95% of farms do cash accounting, because that's what it reports here on their tax forms. And it's it's the same idea as Schedule C. Money coming in, and then you'll add that all up in line 9 here, and then you'll have a bunch of expenses, and then you do the difference. So what are some of the money coming in, the revenue or income? Sales of livestock and other resale items, cost or basis of livestock. People buy feeder livestock. You might buy some 700-pound calves in the late fall, put them on a feedlot and sell them, the summer or later. You would put in the revenue, and then you put in the initial purchase cost. And then 1C will be the amount that you actually have income there. They kind of like the cost, subtracting out the cost of goods sold, if you want to think of it that way. But here's other livestock, produce, grains, and other products, crops and livestock you sell. Here's one that shows up a lot in Wisconsin, patronage. You get a 1099 patronage. 1099 is a form that's used to show more informal forms of income. Here's your co-op. Might give you a patronage refund. That would show up on a 1099 PATR. Taxable amount. You get agricultural program payments. If you get market facilitation program, ARC and PLC, CFAP payments this year, CFAP 2, those will show up here. They'd be declared. CCC loans. We'll talk about marketing assistance loans later. That would show up here on the tax form. Crop insurance proceeds. That's another one you get. We'll talk about that as well. But you can see there's all these sources of income from government programs of different kinds of risk management, disaster, commodity credit corp, loans, etc. Any other machine custom hiring work you might have done, other income, different tax credits and such. But you add them all up, there's line 9. There's your total income coming in as a farmer that gets declared on Schedule F. And then you have your expenses. And these are like Schedule C, they have like categories. Schedule F has these categories that are just agriculturally oriented. So there's your car and truck expenses, chemicals. Think of that as, herbicides and pesticides and such. Maybe cleaning chemicals you want to declare here. It doesn't really matter where you declare them, as long as you declare your expenses. Conservation expenses, you can see the instructions. It might be, installing tiles or terraces or something. Machine work, custom hire, you hired somebody else to work for you. Depreciation, that's what we've gone through that. That's where that gets declared. We've done that in problem sets in the course. Employment benefits you might pay, feed, fertilizer and lime, freight and trucking, et cetera, et cetera, et cetera, et cetera. It's all here. And really what you're trying to do is get all your expenses, and they leave plenty of room to put in different ones that you want to put them in here somewhere, and you got room to put your own in. The idea is to add up everything. So all your income up here, all your expenses get added up here in line 33, net farm profit or loss, you just take the difference. And so you want to get all your various expenses, you want to get them, because line 34 is going to go pushed over up to Schedule 1, which then gets onto the 1040 main form. So that's the way you do Schedule F. There's the accrual adjustment, or accrual methods if you use those. And here's those categories, and you have where farmers declare what kind of farm they are. Here's 112.120 is dairy, which is, I'm sure is pretty common here in Wisconsin. But there's beef cattle and cattle feedlots. If you buy feeder cattle and feed them out, hogs, etc. Oil seed and grain, that's corn and soybeans, or soybeans and corn. Vegetables, fruits and nuts, greenhouses, and etc. So you can see that's where that you declare your type of farm. It helps us understand farms out there, what kind of farms are out there. Here's the last one, depreciation. We'll talk about this in Schedule SC, self-employment. It's just how we've done this in problem sets in the course. This is where you would go through and depreciate your property, name the property, and et cetera, how, if you want to do Section 179 depreciation, that's where you declare it in here. But here's the more traditional makers depreciation, where you get the classification of property. Is it a 7, 10, 15, 20, et cetera? The basis, which is usually your purchase cost, recovery period, which is usually the same as the classification property period, then which convention you're going to use, and then the method, and then you calculate your depreciation amount. And you just go through all your assets and get them here, and you get a listed property, you add it all up, and you should get a total amount of depreciation, which is then put onto your Schedule F, is where it would show up as an expense. But you've listed all here. And so, yeah, that's pretty much that. The last part here is self-employment tax. And what this is the one where traditionally, if you work for somebody as a wage employee, you pay when you get your statement. You're like, well, they took out taxes or something. That's your employment taxes, primarily Social Security, but also some Medicaid, Medicare taxes go in there. Well, traditionally, the employee and the employer split those costs half and half. But if you're self-employed, you have to pay both halves of those self-employment taxes. So they go through various questions here to make sure you have to actually file this. But net farmer profit or loss, there's your schedule from Schedule F or Schedule K1, Form 1065. That shows up here in 1A. That Schedule K is for other business entities. We'll talk about them in the course, but there's, besides a sole proprietor, which would do a Schedule F, you could be a partnership, you could be a C Corp or S Corp, or an LLC, a limited liability company. And these are the ones of these that are passed through entities, where the earnings are passed through to the individuals that own the business. That's where they file that K1 or 1065, and that's where the income is declared, is here in line 1A. There's other ones like Social Security benefits, Conservation Reserve Program payments, and other earnings from other types of things. Schedule C money comes in here. In line 2, you add them all up and you get your total income subject to self-employment taxes. And then you do some work here to see if you actually owe taxes or not. If it's below a certain amount, you don't actually have to pay the self-employment taxes. But then you do the calculations. Let's say you have a lot of self-employment income. You go through the work here. It's below $132,900. You do the math here. You pay 15.3% and declare that as income. And you also have to file a Schedule 2 to declare it. I guess I didn't show that, but there's another schedule, like Schedule 1, there's Schedule 2. And then you get a half of self-employment tax as a deduction from your taxable income back on Schedule 1. And so you get to add that in here, figure out that half that you don't have to pay. A couple of points to note: if it's above this $132,900, you take a smaller amount. You only pay Social Security taxes in that first chunk of income. Anything above that, you only pay Medicare or Medicaid, I can't remember which one it is, taxes, the 2.9%. And then this 132,900 is an index number that will change as the years progress if there's inflation or deflation. So, and this is the alternative long form. But I hope what you get a sense here is these are the forms that a farmer traditionally files. And many of the materials we cover in class is meant to kind of help figure out where these numbers, how they show up on a tax form, how they are calculated. But reality is most farmers hire someone to do their taxes for them. And this would allow you to understand, if you're a farmer, kind of have an intelligent conversation with the person doing your taxes, so you understand some of these things. Or if you want to figure this out, you can make a living helping people prepare their taxes. As